Happy Friday, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the rundown with Rob and Rich. We just started broadcasting live. We'll go ahead and get started momentarily. Rob, we didn't talk about it pre-show. We're in a jungle. Where are you this week?
Well, Rich
And
Todd. So behind me, and Todd, this show isn't quite starting yet, so you can say anything you want, anything embarrassing. But behind me are the remains of a rock quarry. And the remains of the rock quarry were in a movie. And I'm going to give you a hint. We're going to walk over here and I'm going to show you something which will give you a hint.
Short bus.
Well, that's
is that what you drove from to the location? No,
but you'll notice the surrounding area.
Yeah.
And the movie Where I Am was filmed, had Clint Eastwood in it and a school bus. Do either one of you remember a Clint Eastwood movie with a school bus?
Rich?
Oh,
I could start just randomly throwing. I don't remember. I could start randomly throwing Clint Eastwood movies out there, but
okay. Nope. Todd, don't worry. This won't take long. But a famous quote out of that particular movie. Oh, people are getting it in the chat room, by the way. The famous quote was where he gets into a gunfight and he asks the villain, did I fire 5 shots or did I fire 6? And do you feel lucky? Do you punch? Dirty Harry. This was at the end of Dirty Harry. You might remember the villain has the school bus with the kids on it, and they go up into Marin County, and they get off the freeway, and there's Clint Eastwood standing on a train trestle, and Clint Eastwood jumps down from the train trestle onto the top of the school bus, and the guy's trying to kill Clint Eastwood through the top of the bus, and all the kids are screaming, and they go into a rock quarry for the final scene of Dirty Harry, and that's where I am in that rock
question. Do you feel lucky?
Well, I feel lucky to be here because it's a gorgeous day. But anyway,
Rich, 5 round or 6 round. That was the question, I think. The question you
yes, it was
today. Do you feel lucky?
Yep. Anyway, that has nothing to do with mortgage banking, but it is. There you go, Rich. There's a little movie trivia.
Very cool. Your dedication to the show.
Look,
and your
Joe is asking, since he said it first, Dirty Harry, he wants a ticket to Sales Mastery in September.
So who is it?
It's in the chat. I don't know. Rich can find it. I can't see my screen so well, but
Joe Petralia.
All right, I said it first. Okay, so Joe, send us your email, and since Rob said it, we got to honor it. And but it's not 2022. Hopefully, that's
Todd,
the next one.
Todd, when is Sales Mastery this year?
October 11th through the 14th. And we are going to be back at the JW Marriott in Palm Desert, where the first Sales Mastery was held in 1992 with 212 mortgage professionals. And this year it'll sell out at 2,000. It's so exciting. 30 years.
So I need to tell one quick story, Todd, that the highlight of my career was you had me speak at a Sales Mastery, and I was there. And you'll remember this, but you came out on the stage, and you came out, and there were like thousands of people in the stands or in the auditorium, and you said, "Oh, I want to bring out Joe Smith." There you go. Rich is showing the resemblance between you, me, and James Taylor. But um, you said, here's Joe Smith, and Joe, come on out. And Joe comes out and he's wearing shorts and boots and a t-shirt or something. And you said, last year we were here and I noticed Joe Smith, and he was working and working hard, or whatever little speech you gave. And you said something like, Joe, show us what you do, Joe. And so Joe goes like this, and all of a sudden, from way back in the rafters, and this hawk or this falcon swoops down over the crowd and lights on Joe Smith's, wrist. And Joe gives it a dead mouse or whatever Joe gave it. And so it turns out this guy, his whole job is to roam around San Diego hotels with his birds of prey, chasing away pigeons and other things.
Eagles and
That was a memorable opening to a conference, I'll tell you.
It was crazy. And then we even had tied it to, he had a mouse on a leather string and was holding the hawk back, and the hawk kept pulling and pulling and pulling. And he finally let it go to get the mouse. And I said, are you following up with your leads the same way this hawk is following up with the mouse? And everybody.
Yeah. Yeah. That was something.
It was unbelievable.
That was something. Anyway, we digress. But that was a great sales mastery. Big thumbs up.
Yep.
As always, Rob, your dedication to the show, your secret locations. I'm not sure if I'm more appreciative of how much you give to the show, or jealous of all the time you have to go to these different places. But regardless, our viewers and listeners benefit, and our live audience, now well over 300, they were all over the Dirty Harry thing. So all over it in the chat. And
as Rob said, now we digress.
If you haven't been able to tell by now, lucky to have a special guest. And of course, this is the Rundown with Rob and Rich, where we take you into the weekend every Friday, 3 p.m. Eastern, by kind of running through the week that was in the mortgage industry. And this week, really pleased to have renowned author, speaker, sales influencer extraordinaire, a very well-known name to anybody in our industry, the one, the only Todd Duncan. Todd, thanks for coming on the show.
Hey, Rich. Hey, Rob. Good to hang out with you guys. Always love hitting Fridays hard and celebrating the week and preparing for the week to come. So excited to see where we go with this, but good to be with you guys. Thank you.
And I've never seen you and Rob in the same place together before. So I've been espousing secretly a conspiracy theory that you guys have been the same person to those that are close to me for 20 years. But now that conspiracy theory has been proven untrue.
I think the three of us all use the same volume enhancing conditioner and energizing shampoo.
The problem with me is when that hawk was flying in San Diego, it landed on my head and took all my hair with it. And so I used to not look like Rob, but now I kind of do. And then every once in a while, somebody will throw in John Cleese, maybe. John Cleese, yeah, from Monty Python.
Oh.
I don't like that one. I'd rather be compared to Rob Crispin or James Taylor.
Yeah.
Well, thanks again for joining us, Todd, and really excited to get into the conversation. Really, it's been a challenging, obviously, sales climate for the mortgage industry this year. So really eager to get your thoughts on the way that our industry and salespeople should be positioning themselves in this type of market and the one that lies ahead. So it should be a good show. As always, our audience, you're a step ahead of me, but thoughts, comments, jokes into the chat of the Q&A, and we'll incorporate them into the show if they're worthy. So, Rob, let's start with the jobs report this morning. Again, a better than expected jobs report this morning. 372,000 new jobs added to the U.S. economy in June amidst expectations of about 250,000. The unemployment rate stayed the same at 3.6%, just I believe 0.1% or 2 above what it was just before the pandemic, which was a 50-year low. So we're really, really healthy labor market right now. You dig deeper into the report, the hourly earnings component really was one that everybody was looking at closely just because of the inflation tie. Hourly earnings up 5.1% year over year, again, beating expectations mildly for what people were expecting. So, as a result, you had the bond market, mortgage rates that have kind of sold off because it's not an inflation-friendly job report. What it says is we have a very healthy labor market that is going to do nothing but stoke the inflationary pressures right now. So it's going to put, in theory, even more pressure on the Fed to raise. I think most people feel they'll do 75 again here at the end of the month. But I think right now you got politicians actually cheering for job loss. It's a bizarre market right now. Biden came out a week or so ago and said we need about 150,000 new jobs a month to help combat inflation, with 372 this month. So it tamed down all this recession talk we've been hearing, because again, just another example of how strong the labor market is. What did you make of the jobs report this morning?
Well, first of all, I should ask Rich and Todd, can you guys hear me okay?
Yeah.
Good. They've started up the school bus to reenact the Dirty Harry scene. Actually, I think it's a family that's, I think the family's actually living in the school bus. Speaking of housing. But Rich, this leads, actually, the question leads directly into what Todd specializes in. When people ask me about interest rates and so forth in the economy, we can't, it's like the weather, right? It's like, we talk about the weather like, hey, is it going to rain tomorrow? Hey, is there a storm coming in? The question is, how do you prepare for it? Right now, the economy, the general trend is towards higher rates. I don't think any of us really want a recession or another pandemic to drive rates lower. The question is, how high can rates go, or how high will they go, and why will they go any higher? Because the economy is doing pretty well. When you talk to anybody who's been, and I've said this before, Rich, I know you're sick of hearing it, but when you talk to anybody who's flown anywhere recently or eaten out in a restaurant, the airports are packed, the parking lots are packed, stores are packed, restaurants are packed. And yeah, to some extent, families are eating into their savings that they've accumulated over the last couple of years. But so many families have refinanced their mortgages thanks to our industry at lower rates. Payments are actually down. Corporations have done the same thing. The US government has done the same thing. So from a balance sheet perspective, we're in pretty good shape. Banks are flush with cash. And I don't know what you guys are earning on your deposits. I'm earning, 5 or 10 or 15 basis points. And it's not a big jump to figure out, gee, if the bank is paying me 20 basis points and they can buy or originate a 30-year loan, a Fannie or Freddie loan, and get 5.5 or 6% interest, that's a great spread. So banks, credit unions are investing in fixed rate or adjustable rate mortgages and putting them on their books just because of that spread. So we're sitting here looking at interest rates that are probably going to go higher. How high? Nobody knows for sure. Are they going to go so high they cause a recession? Let's hope not. That's the Fed's goal, is to get them high enough to put a damper on inflation, not high enough to cause a recession. But I continue to remind originators, and this is where Todd comes in, that, there's nothing we can do about the economy. There's nothing we can do about interest rates. It's how, as an originator, how do you act or react, and what is going through your mind, and how do you best help your clients? So Todd, I want to flip this over to you in terms of what you're doing and what you're seeing on the originator side of things. What are you telling originators in this kind of environment where rates have gone up and there's nothing you can do about interest rates, but what are you doing to help your clients, and what kind of mental mindset are you advising originators to have right now?
Yeah. First of all, great run up, Rob, on all of that. And Rich, thanks for the data. Yeah. The one thing that I would remind everybody of right now, to Rob, your point, is none of us can control the economy, but what we can control is what we do in whatever economy we're in, right? And so, I come at this from an interesting perspective because I've been tracking recessions, and the first big recession was in 1795. It was called the Panic of 1795, and it lasted 4.5 years. And that became kind of the cycle of how often does this stuff happen? And if you take a look over the time between 1795 and right this moment, we've had 48 full-blown economic recessions. So they happen about every 5 or 6 years. So we know it's part of the mix. We know it's part of the play. I think what's happening right now is we just got shell shocked so fast because rates went up so quickly, and refis pretty well dried up, maybe a few cash outs, in the first quarter. But we run into Q2 and we start to realize that we've had pricing pressures, we've had inventory pressures, we've had increased interest rates, we've had buyers getting edged out, we have a lot of buyers on the sideline, we have an affordability issue. So that's real, right? I grew up in an economy where prime was 22%, FHA and VA was 18.5%, first and second piggybacks, 19%. And I just chose abundance over scarcity. I made a decision that, if everybody thinks the sky is falling and I actually think opportunity is rich, then I can succeed in any market. And so I'm telling people today, we just published an article called The Great Reset of 2022. And the first thing I told people is I said, in today's market, you cannot let the market define you. You have to define what you're going to be in the market. And so what's happening right now? Trust is more necessary than ever. Follow-up is more necessary than ever. Advice is more necessary than ever. If people have a long-term play on real estate and today rates are top fives, mid sixes, we're going to have a refi market in 4 years, and we're going to, everybody thinks there's never going to be refis again because everybody's at 2.5, but this is the reality. And if they go to 7, if they go to 7.5, they go to 8, what's the appreciation going to be for 5 years? And, what is the cost of waiting going to be if you don't? And, what is your extra mortgage payment? Is it 100? Is it 300, 200? And does it pan out in the end? That's why advice is so important. But I don't want people to be fearful. I want people to understand that today is a great economy. It's, compared to selling loans at 20%, this is a walk in the park. But a lot of people have never had this walk in the park because they're used to 2 or 2.5 or 3. So abundance first, trust second, advice third, and then really look at the emotional connection piece today, because conversion is a function of connecting with people versus pricing your way to connection. You can't have human connection if it's all about price. So that's kind of what I'm at a high level telling people today. And, at the end of the day, if you really understand that realtors are still selling real estate and builders are still building new homes, and you've got people in the financial market whose financial advisors are advising more than they've ever advised, this is a prime time to actually build the business. And you could have 20 or 40 new interviews in the next 90 days with referral partners, and you could be back to the races. It's not difficult. It's just hard because you're not used to it.
Todd, the referral climate, what's your sense on, I'm not out there in the street. I talk to our members, obviously, but just the pandemic, you got less realtors in offices, you got, less homes that are available for sale right now. You talk to any realtor and, there's lots of lenders that are knocking at the door or sending emails or texts. And, the thing I see right now with mortgage lenders is they're really looking to differentiate themselves, especially with referral partners, but I think everybody's kind of saying the same thing. Like, we got every product. If they do or they don't, they're saying it. We can close in 25 days. Everybody's saying that. And I think you're finding lenders trying to think of other creative ways to differentiate themselves. What is your just general sense on how the referral climate has changed because of the pandemic? And to touch a little deeper on something you just talked about, any really more specific advice for new salespeople maybe that are having to sell for the first time in their career in this industry?
Yeah. It's it's always been the truth, Rich, that there's a few realtors who always sell more real estate. It's like, is it the 80-20 rule? Is it the 90-10 rule? Whatever it is, right? And so we've always told originators to try to really work with real estate agents that might be in the top 50% quartile, right? And if you're newer to the business, you'd probably want to hit that top 50 to maybe 75. And if you're experienced, you probably want to hit the 75 to 100. Who are the 25% of realtors in your community that are selling most of the real estate? And what we know today is that there's a real need for trust. And so one of the ways that an originator can create trust fast today is ask questions they've never asked before. So for example, I could ask a real estate agent today. Let's say my title partner says, call Joe over at, Century 21. And I call Joe and I use my title partner's name. And I say to Joe, I said, Joe, Ron wanted me to talk to you today because we actually have a pretty cool referral program that, based on the buyers and sellers you're working with, we can multiply the referrals from those buyers or sellers and get you more deals today. Is that something you'd be interested in? And anybody that's worth their salt would say, if you could partner with me and help me generate more business, then I'd be open to that, right? Particularly because it's a referral. And so I'm going to meet with Joe. We're going to have some conversation about what he does or what she does. And, or if it's not Joe, but Josette or whatever. And we believe that if I can come to this conversation of how to bring economic value and bring business to my partners, whomever they may be. It could be a builder, it could be a realtor, it could be a financial planner, it could even be a business owner with 1,000 employees, right? Then we have the proximity to be the super glue between where they are right now and what they would like to have. And so then the other piece is 99.2% of LOs in our most recent survey of 5,000 LOs do not follow up with their agent partners weekly to ask a couple of referral lead gen questions. So if you're not following up, you can't follow through and there's not going to be business. And so let's go ahead when we sit down with Joe and Joe says, I'd love to develop a partnership with you. Why don't we tell Joe that over the next 12 weeks, we're going to talk every Friday for 15 minutes. Maybe it's 1 o'clock or maybe it's 2:45, whatever works for you, Joe. And I'm going to schedule that right in Joe's presence. And I'm going to say, let's go out 90 days. And every week I want to call and I want to ask you a couple of questions. And then based on the answers to those questions, I want to be able to add value and bring value back through these weekly meetings. So let's say Joe says yes. Then we have a quick conversation, and this is killer. It's called the lost leads conversation. So we say to Joe, how many transactions have you closed year to date? And let's say Joe says 30. And we say to Joe, how many people did you have to talk to for you and your team to close 30 transactions? Let's say Joe says 300. So we say to Joe, there's 270 people that have not yet converted yet, right? And Joe's going to say, right. And then we're going to say to Joe, what percentage of those 270 people do you think we could get back into a transaction if we had a more unique marketing approach? And let's say Joe picks 10%. So that's 27. So then we ask Joe, how much do you make per transaction? And let's say Joe says $10,000. So we basically say to Joe, there's about $270,000 in commissions at stake. And my only question to you is, would you like to figure out a strategy where you and I can partner, my team and I can make calls to those buyers and sellers that you're not sure are going to use you and bring those transactions back to you in economic value? And at the end of the day, Rich, everybody's going to say yes to that. The key question is, are you good enough at that dialogue? And are you prepared enough for the follow-up to go through making that decision and then following up? So in this report, there's 20 different referral sources on every loan transaction, period. And so if you understand that and you understand I've got to create massive trust with the borrower, because the borrower becomes my gateway to all of these other business verticals. I can have a bank, I can have a credit union, I can have a CPA, I can have a financial planner, an insurance agent, a wealth manager, I could have a trust attorney, a real estate attorney, an estate plan. I can, and the universe is full of people right now that are going to buy a home. And that's why we have to be abundant in our thinking. But this art of follow-up, you guys, it is the biggest no-brainer in the history of business, particularly mortgage lending. And if you don't follow up, people will not follow through. And that's where the cash is, man. Follow up better than anybody and add value every time you follow up, and you're going to get the business.
Hey, I'm going to interrupt, or maybe you were done, Todd, but Rich, I can't quite see the screen because of the sun. I know the questions are flooding in for Todd and myself, but I just wanted to reiterate, Todd, what you were saying. When I talk to successful loan officers, and you just elaborate, but I'm going to give you the Reader's Digest version here. When I talk to good loan officers, oftentimes I'll say, what makes you good? And what makes you good, Frank? Well, Frank says, I know that for every 50 phone calls or 100 phone calls, I'm going to get 5 leads. And for every 5 leads, I'm going to get 1 that might pan out. It's just, for him, it's a numbers game. So every day he's looking at it like, okay, I've got to make, if I'm going to close one loan a day, I need to make 50 phone calls, a month earlier, every day. Every day they're doing the same thing. It's a consistent thing that we see not only with realtors, but also with loan officers, also with pro athletes, right? A number of pitches, amount of time in the batter box, number of field goals, number of free throws. I mean, it's a numbers game in so many ways. And so, Todd, I think you're obviously spot on. But Rich, do you have questions or?
Yeah.
Like I said,
Yeah, no, I had several questions, comments that have come into the chat, a bunch of good ones. I'll read one aloud here. With online access to application and rates so readily available today, how does a community banker pivot against a consumer who is driven strictly by price? And how do you prevent your team from getting discouraged when they lose more deals today than ever before due to competition? That one's for Todd. There's a couple Rob ones as well, but Todd, I'll start with you on that one. Selling to a price motivated customer, if you're like a community bank that has that extra touchy feely service that you're attaching to the transaction.
It doesn't really matter to me where the connection is. What matters, I think, is how do you, in a very short period of time, gain the borrower's attention that even though there's lower rates elsewhere, and even though there's online apps everywhere, is there strategy that is being created to help you manage the largest debt of your life? And so when we talk about embedded commands and we talk about this idea of using what in the science of influence is called pattern interrupts, a pattern interrupt would sound like this. So a borrower says, I found this somewhere else and blah, 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 blah. And so if I'm a loan officer and I want to pattern interrupt that, I'm going to say, I appreciate the fact that ABC has a rate quote for you today of this. Are you aware that the lowest rate with the wrong strategy could cost you more than a loan product or mix of a slightly higher rate with a good strategy? And then they're going to go like, well, what does that mean? And I'm going to be able to say there's 100 different ways to finance this home. But in order to offer you the right financing package that has the right payment, the right interest rate, and the ability to meet your long and short-term investment goals, there's some conversations that we need to have that most of the people you've just used as a reference for a lower rate don't know. And when you have those kinds of conversations, I could say to somebody who says, what is your best rate on a 30-year fixed rate loan today? I could say it all depends. And they're going to go like, on what? And I'm going to go, let's just start with your down payment. Okay. Because I can give you 0% if you put 100% down. I'm just delaying because I want people to understand that there is
Right.
no interest rate and there is no payment and there is no fee schedule that you can produce without having a conversation with a borrower on what they want to do. We have 10 game-changing questions. What's more important to you, lowest payment, lowest rate, or the lowest overall cost of borrowing for the 5 to 10 years you're going to own this home? All we have to do is ask questions that are legitimate. These are not bait questions to get people to, they're really, if I'm in the advice market, I could say to somebody, I could quote you a super low rate right now, but to do so would be the equivalent of malpractice. I got to figure out what you're really looking for, what's important to you and your family, what are your financial goals over the next 5 to 10 years, and how does this mortgage impact that? We got to get away from the rate game because like if somebody says, what is your rate? I'm going to stop and I'm going to say, it all depends. Before we talk about that, what are you trying to achieve through home ownership? What are your goals long and short term? All I have to do is turn it around, Rich, and I've got them. I got one more thing to say, but I'll see if it's organic. Let's go to some more questions. And
Todd, I was going to say the conversation isn't, if a loan officer gets a call, what are your rates? I always tell people, well, you need to steer the conversation immediately to, well, how'd you get my name and number? Oh, how do you know Frank? Oh, what are you trying to do? You refinancing, you're buying a house, tell me about your family, tell me about what you're trying to do. It's to get away from rate because, that is a fantastic way that in-person loan originator can beat somebody on the internet who isn't asking those questions. It's, well, our rate, they immediately get out the rate sheet and they say, well, our 30-year rates or whatever, but an in-person loan originator will say, well, I can quote you a 30-year rate, but I'm thinking, we got some really great 15-year rates, and let's take a look at these intermediate arms. Whoa,
Yeah.
look at
Yeah.
these. Let's figure out how long you're going to be in the house. It's a conversation that you can't have on the internet, and that's why I think loan officers are so important in this environment.
You know what we'll do, Rich? If we can get a document over to you guys, it's a one-page document on game-changing questions. We'll go ahead and give that to you. You can push it out to the group that's part of this Friday call every time, and they'll find some real value in it. Real value.
That's awesome. Yeah, no, we'd love
Yeah.
to. Yeah. So this is the Rundown with Rob and Rich. I'm Rich Swerbinsky with the Mortgage Collaborative, joined as always by Rob Krisman, and this week's special guest, Todd Duncan. Rob, question for you in the chat. With margins so tight, each loan matters, and where you send that loan matters to your investors. How do you choose who you sell your loans to? Example, keep your favorite investors alive if you want them there tomorrow. Sometimes it means not the best price all the time.
Yeah, I would say there's a lot going on right now, Rich, or whoever asked that question, because to be brutally honest here, in this environment, a lot of companies aren't making money every month as they have in the last few years. And when you're not making money every month, you get a good hard look by your warehouse banks, and you get a good hard look by your investors, not only your correspondent investors or your wholesale investors, but also the Fannie Mae and Freddie Mac and the broker dealers. And so if your company did not keep earnings in their coffers and aren't making money, things get very difficult from a capital markets perspective. And it's almost a downward spiral in some cases, because if you're dealing with the A list of investors and suddenly you're losing money for some months or some quarters, and those investors cut you off, then you have to go to your kind of the B list of investors that are out there, in which case you're offering either your loan officers or your AEs a worse price. And so it can be a very tough environment. That's one of the rules, or one of the things the capital markets departments do, is balance rate and price versus service and reputation and history of doing business. And in this kind of environment, I think it's important for companies to keep the investors that they've had all over these last several years. And yeah, you might have to give up a little bit on price, but you hope to make it up on the next deal. And every loan is important, and the margins are very tight, but it is a margin play and a price play. But I still believe that that's only part of the equation. I think the relationship is very, very important. And, I think AEs are out there, wholesale AEs and correspondent AEs, reminding their clients of that. Hey, we might not have the best price, but you know what? When you call, you're gonna get a call back. And how long have you worked with, Frank, our underwriter? Frank's been with us for 10 years, and he knows you guys. And so when a hard deal comes along, Frank's gonna help. And so it is, I think, a big part relationship. It's not entirely a commodity where it's entirely based on price. I think relationship does matter, whether it's an investor or a vendor. If you're dealing with a credit reporting agency, or you're dealing with an LOS, or dealing with a hedging company, it relationship does matter. Obviously, price is important, but I'm a big proponent of relationships.
Good segue to our next question, which was addressed to both of you guys. In this market, loan officers want to jump ship, believing the grass is greener for price, rates, etc. What say you to them? Todd, we'll start with you.
The first thing I would say is the grass is only greener where you water it. And the second thing I would say is, if it sounds too good to be true, it might be. And the third thing I would say is, if they're going to write you a check as a signing bonus, it's going to get back to them in ROI some way or another. I think the better question is, what are leaders doing today to connect with their teams so that they are not jumping ship. And, you know, what's the relationship between a branch manager and LO, and how well do they actually know their players? I got a call from one of our elite members the other day, and to his surprise, he had 2 people on his team leave and he couldn't figure out why. And I said, when was the last time you had a deep conversation with them? And he said, probably a month ago. And I go, maybe something happened in the month. And he sat down and thankfully was able to have a conversation with both of them. And he was able to keep one, and he lost the other. And that was like a shock to him. And then I talked to another one of our lenders yesterday who's got next week are onboarding 50 people from a company that basically said, and I give this to you as straight up as I can without implicating anybody, we weren't feeling the love anymore. That's like, wow. And so, you know, for me, the way I would answer the question is people, there's a stat that 94% of employed people would not leave their company if they had more personal development and trust with their leader. That's a huge number. And, you know, recruiting is a big deal right now. And it's a big deal, bigger than ever, because companies are getting spanked a little bit and they're trying to attract talent. But you can attract talent and write a check and lose talent because you weren't connected. And so, you know, I don't know the long-term answer, but if it seems too good to be true, it can be, and it might be. So I always tell people, reflect on where you are. Here's a stat for you guys. If we look at our elite group, which are 33 producers right now, last year they made $91 million in sales commissions. The average length of employment that they have had with their current employer is 14 years. So I think good people don't like to move. I think they stay if they trust leadership and they feel that. And probably the people that want to move are the people that don't have a secure plan anyway. And sometimes the big producers get big checks, and that's a loyalty issue. I don't know. I don't know why you would leave a company if the company really knew what you were trying to accomplish in your life and made it worth your time. I don't know. I could be naive here, but
No,
yeah.
yeah, I agree with Todd 100%. The people who move around, you know, I mean, there's a reason why people move, but I think for the most part, people would rather stay put because you get to know the origination system, you get to know the underwriters, you get to know the pricing, you get to know the capital markets team, you get to know the management, you get to know the system, and that's more comfortable, and that's a better environment for a lot of top producers because they don't want to sit there and have to think about, gee, is something better somewhere else. They'd rather be focused on helping their borrowers or helping their clients if they're a wholesale account exec or a TPO account exec. And the ability to focus on helping their clients rather than, you know, taking a recruiting call once a day, it makes a big difference.
Yeah.
So
I had a top producer, you guys, that 4 months ago under our leadership decided to convert a portion of her office that was available to a learning center. And she's been holding realtor lunch and learns every other week with her team and bringing about 30 realtors in, completely repurposed her office. And she is a top producer. And she sent me a text this morning. She said, you're not going to believe this. In the month of June, our branch funded $17 million. She's the originator. There's not one other originator in this team. And in a bad market with high rates, she's educating her partners. She's retaining them. Branch managers need to be educating their loan officers and retaining them. And I mean, you think about a $17 million a month branch in a high interest rate market, and all she's doing is getting back to, let me create value for the people that I trust so that they will stay with me and continue to refer buyers and sellers to me every single day. And that's what our business is about. You can choose relationships or you can choose transactions. You can make a living with transactions. You can make a fortune with relationships. And I will go to my grave a relationship guy. And I believe that that makes everything easier, more profitable, and more streamlined. And I think managers that don't have a relationship with their loan officers, it's a penalty when they leave you, because it reminds you didn't know the first thing about what they really, really wanted. And it's a slow fade. It's like, I don't wake up on a Monday from a Friday and say, I hate my manager. You know, I wake up on a Monday from a Friday and like 7 months of Fridays going, I wonder when he's going to pay attention to me.
Very well said.
Yep.
And Rob and Todd, and great questions from our attendees. I'll use this opportunity to tell the live group, our biggest audience is on podcast. If you're a live listener, you don't listen to our podcast, go to Apple, Spotify, just search TMC Connect and to subscribe to our feed. And if you're a podcast listener, join the live broadcast every Friday at 3 p.m. We got about 350 people in here now that are firing questions at Todd and Rob. So, Rob.
Hey, Todd.
Yeah.
How do I know we've only got about 5 minutes left here. Tell us about, I know this is a blatant pitch for sales mastery, but why do people go to that? And it's a multi-day event. How has it changed over 30 years, and what is the goal? What is it that you're trying to accomplish at the end of that time period for originators?
Yeah. The first thing I would do is tell everybody just to write down SM, which is the initial for sales mastery, and followed by the word Chrisman. And there is a $500 promo code for anybody that's part of Chrisman and TMC to be able to save $500 off the retail price of the ticket. I would tell you right now, I wake up every day, and when I invented sales mastery in 1991 and we held our first event in 92, the only goal I had was to get a community of top producers together to learn, grow, and get better. And today we've had over 80,000 loan officers attend sales mastery. There are millions of consumers that have been impacted by the message. And every year I repeat the recipe. Let me bring successful entrepreneurs in, successful originators in. Let's talk about innovation. Let's talk about conversion. Let's talk about disruption. Let's talk about new ways to build teams. And let's talk about what, remote working looks like, and what does video marketing look like, and why does auto marketing not work? And what are the things that the best are doing today? So we have 44 presenters over 3.5 days, 7 of which are not in the business. They're very well-known keynote speakers that, for example, the head of training for Chick-fil-A, one of the biggest, most profitable restaurant chains in the world, is going to be speaking about how do you delight the customers with the products that you sell and service. And that's a beautiful thing we need today. We need to really look at the consumer experience. So this year's about innovate. It's about an intensive, lots of interactive, lots of polling, lots of discussion. I've got a brand new presentation I'm going to teach on how to get a borrower to say yes in 5 minutes or less. And it's really, really cool because we got 103 examples of borrowers who have said yes to a lender in less than 5 minutes with this one strategy. And let's face it, if you can take conversion up by, getting back, Rob, to your point, numbers game, what if we talk to 10 and get 1? How about we talk to 10 and get 2? How about we talk to 5 and get 3? How about we talk to 4 and get 4? That's kind of the efficiency game that we're going to teach. So we're proud of the brand. It's a 30-year celebration. We're obviously got a lot of surprises in store, but again, everybody from your guys' tribe can come with SM Chrisman and save $500.
Is there any truth to the rumor that's sweeping the industry that you're actually going to have a breakout session for guys and gals who aren't married, and work that same numbers game, and how to get people to say yes in X number of minutes and so forth?
We actually have an app that we're launching that is a connection app for guys that are in that kind of situation. And
are you really? No.
No,
Well,
but I will tell you that one of the
one.
reasons my wife loves me so much is on our first date, I asked her a bunch of questions instead of telling her about me.
Some dating advice.
Courting, take the spotlight off of you, man. Put it on put it on who you're courting and make them feel special. And it's over, baby.
Todd, you'll be happy to know, speaking of Rich and dating, Rich is not dating, which is good, because just a few weeks ago was when he finally took down the Christmas lights that were on the window behind him that had been there for 6 months. So,
oh my God, this guy's they're still there, aren't they?
Yeah, it was a
maybe it's just an efficiency. Oh, I see. The blinking on and off.
Anyway,
just a couple minutes left. Time flies by as always. Rob, some other stuff in the news this week. Feels like Biden administration is getting close to a reduction in FHA MIP, the premiums. The FHFA implemented this commingled security 50 basis point fee that's created a lot of hubbub and discussion. You got leaders at the central bank in England talking about doing 50-year mortgages and assumable mortgages. You could transfer like from mom to tiny homes, Rob, one of our favorite topics. some group came out with some study predicting explosion in the tiny homes
2026.
market. Yeah, these last 3 years. Anything in there that tickles your fancy on a Friday?
Not really. That said, Rich, I do have an observation. I've been doing some traveling, as you know, and
Let me guess,
popping
the
around
airport parking lots are full.
airport parking lots are full, but more importantly, I'm seeing more for sale signs up than I have in quite some time. And granted, some of that has to do with the summer selling season, but I think the inventory levels, I think, the numbers will reflect at some point when they're reported. I think I'm seeing more for sale signs in the areas that I've been to recently than I have in the last year or two. And I think that's interesting. So, but yeah, we talk about tweaking this and tweaking that and so on. I still think that the system isn't really broken per se. And yeah, I mean, we can adjust the MIP premium, or we can adjust the FHA insurance, numbers, or we can, do a 40-year mortgage instead of a 30-year mortgage. But the fact of the matter is, and it comes back to what Todd has been promoting and what he's going to talk about at Sales Mastery, is that the, making your originators or making your account executives, making your sales staff more efficient and more productive is so much better than going out and paying a huge signing bonus for somebody new. And if you have 100 loan officers and you can pick up their productivity by 1 loan each per month, I mean, think of the leverage ability that's out there. So yeah, we're going to be hearing about tweaks and pricing adjustments and tiny homes and so forth. And yeah, we could talk about tiny homes next week. I'm fascinated with tiny homes, although I will probably never be able to live in one with my beer can and bottle cap collections. But I think it's a tough environment, and to be able to increase your productivity and efficiency is a huge plus in this kind of environment.
Very uplifting to take us into the weekend. Todd, any departing parting thoughts for our audience? Maybe something uplifting to take us into the weekend here?
Yeah, 3 things come to mind. Don't go through what we're going through right now. Grow through it. Understand that iron sharpens iron, and tough times produce winners. One of the things that I aspired to early in my career was that tough times never last, tough people do. This too will pass. And then this is the button from when I was originator that said, rumor has it we're in a recession. I'm not participating. And that was my mindset in 1981. And real estate agents would go, what the hell does that mean? You're not participating. Do you know if I participate, I'm not going to add any value to you? Do you know if you participate, you're going to think nobody's listening and nobody's buying? So let's just choose to think differently. We're not going to play this game, and we're going to add value. And the reason why there's so many more listings right now is because sellers realize that we've kind of hit a ceiling of appreciation. And this year, the appreciation is going to be maybe 4%, where last year it was like 19%. So sellers are starting to get realistic about if they want to take chips off the table, they got to do it now. This is going to pass. And imagine people no longer originating loans because they weren't equipped, they weren't prepared. And I'm sad about that. I'm sad about layoffs. But this is a cleansing moment for value. And if you really, really want to create a recession-proof business, an economic-proof business, you've got to be in the value business, the advice business, and you got to be in the relationship business. That's it.
Love it. As do our viewers, a litany of really positive comments in the chat. And Todd, really, really appreciate you joining us. Very well timed with what's going on right now, and such a established and voice of reason in times where a lot of people are looking for one right now. So really, really appreciate you coming on the show.
Thanks, Rob.
Yep, absolutely.
Cool.
And Rob, as always, thank you for joining me. Any plans of note this weekend? I always ask you.
I'm gonna play some hoops tomorrow morning. How's that?
That works. So yeah. And Todd, you're in California, right?
Yeah.
And you said Newport, I think, coming into the show, right?
I'm in Newport now. My house is in Laguna. Yeah, Laguna Beach. I'm going to go for a 55-mile bike ride tomorrow. Damn. From Laguna to San Diego and back. And I'm not going to shoot hoops. I can't fit in a tiny house because I'm 6'5". But I'm going to go see a movie with my wife and walk on the beach and enjoy the sunshine of SoCal. And I love being on your show, guys. And if anybody wants to connect with us, it's toddduncan.com and just download our free guides. And we have some stuff that you can use today to start making this relationship piece work. And can't wait to see you all at Sales Mastery. Thank you, guys.
Love it. toddduncan.com. And thanks again, Todd. And to our audience, thanks as always for wrapping up the week with us. We're here every Friday at 3 p.m. Eastern with the Rundown with Rob and Rich. You can also find us on YouTube and on podcast. TMC Connect is the name of our podcast feed. But gentlemen, thanks again for the great conversation, and have a great weekend, everyone.
See you guys. Thanks.